I want to talk about a very special investigation. The one that broke the Luckin Coffee financial fraud, crashed a once high-flying stock, and added fuel to the Sino-American trade war. There's nothing special about financial frauds. They happen all the time. And China has no monopoly on financial frauds. A big one just happened recently with Wirecard in Germany. But the thing is about the Luckin Coffee investigation that impressed me was the sheer depth of detective work and data brought to the case by an outside party. The report was a pretty stunning effort, and I consider it a financial work of art, so I want to go through it today. Things in China happen fast, but few things blew up, in both good and bad ways, as fast as Luckin Coffee. The company was founded in 2017 October by Charles Zhengyao Lu, a Chinese businessman who founded Car Inc., a Hong Kong-based car rental company. In January 2018, they began opening their first shops in Beijing. Luckin Coffee competes with Starbucks in China. Unlike Starbucks, though, their shops are of the small, hole-in-the-wall variety, about 200 to 600 square feet in comparison to Starbucks' 1,500 to 2,000 square feet. You can't sit in their cafes that often. They're mostly good for preparing the coffee. You order through an app and then pick it up at the cafe. The company used aggressive discounts to gain prominence and mindshare. Each new customer gets a free drink and a 50% off coupon for another cup. They also issue buy one get one free offers for their loyal customers. They are definitely taking the Uber and I guess the WeWork route. The company received a $200 million injection of funds with the Series A round 6 months after the first shops were opened in July 2018. Investors included esteemed names like BlackRock, which is the biggest asset management firm in the world, China International Capital Corporation, one of China's leading investment banks, and the Singapore Sovereign Wealth Fund, which manages $440 billion. Then less than a year later, the company IPO'd its shares on the US stock exchange in May 2019. This is all really fast considering that you have huge VC-funded companies like Airbnb and other unicorns trying to stay private for as long as possible. But the stock soared at first, doubling and taking the company's valuation to as high as $12 billion. Investors drove up the stock because the metrics looked beautiful. In November 2019, the company released eye-popping Q3 results, and the stock skyrocketed. Q3 2019 results showed store expansion up 50% from Q1 2019 and 300% from the previous year. Luckin operated some 3,680 stores at the end of Q3. Management predicted 4,500 stores by the end of the year, which would challenge Starbucks' 4,125. Luckin was opening a store once every 15 hours. Another thing they showed on their Q3 report, titanic revenue growth year after year, up 517% from $35 million in 2018 to Q3 2018, to $216 million in Q3 2019. What's more, management predicted that they will be profitable in the fiscal year of 2021. The number of monthly customers transacting at the stores was up sequentially from quarter to quarter. In addition, these customers were buying more and more, from 3.7 items per month to 4.7 items per month. That kind of growth is kind of crazy. So investors believed that Luckin Coffee represented a credible competitor to Starbucks. People looked at the fact that Starbucks never grew as fast as Luckin even in the 1990s, and they looked at the 1.3 billion people in the coffee market, potential coffee market. And I wonder if they must have thought that China, because Luckin Coffee was a homegrown competitor, would, for some reason, favor Luckin over Starbucks. But anyways, whatever they thought, they fell in love with the growth story. And I suppose they would be right to do so if the metrics were actually real. Muddy Waters Research is a famous short-selling firm, and they are famous for publishing and making money off a few big China-centered shorts. But they did not claim to have done this 89-page report. It alleges 5 things. The number of items sold per store per day was inflated. Items per order actually declined from 2Q to 4Q without growing. Net selling price per item was inflated. Advertising costs were overstated, recycled through a company called Focus Media. and revenue contribution from other products is overstated. I want to focus on, I think, the first few and ignore number 4 and number 5 because I think the first few are super impressive. First, the first item. Luckin estimated that in 4Q 2019, each of their 3,800 to 4,000 stores would sell 495 items per day. That is what they reported to their shareholders. That's what they're going to be held to when the report comes out in the end of that quarter. In order to confirm this number, the report author, whoever they are, hired 92 full-time staff and 1,418 part-time staff to literally sit at 620 stores and run video surveillance on each of them for literally the whole day. They covered 38 of the 53 Chinese cities that Luckin operates in. To find the shops, they scraped the Luckin app. Then they hired someone to go sit at the store and point a camera at the takeout counter for as long as the store was open. So for 11 plus hours. If over 10 minutes of footage was found to be missing, then they would discard footage from the entire day. They did this for dozens of cities and locations across all of China. Weekends, weekdays. This is 4 pages of basically this graph, this information. And I'm not going to lie, it's pretty impressive. And they had to do it without getting caught. Was someone not going to notice a dude just sitting there watching the counter with a camera the whole day? Then they sat down and they counted for 11 plus hours the number of customers picking up orders at the counter. And then they counted the number of order bags picked up by food delivery men every time they came to the store. And basically what they were able to find is that what was actually reported and what was the reality wasn't there. And I think that's really impressive that they literally had to record to find this out. But the report author did not stop at watching CCTV footage. They put the call out and collected 25,843 customer receipts from over 10,000 customers in 45 cities. Each receipt shows when and where the purchase was made, what kind of purchase it was, pickup or delivery, the items purchased, the list price, and the actual price paid. The receipts were collected in proportion to Luckin's population in terms of city tier and store type, achieving a 99% statistical confidence interval. The margin of error on certain metrics like average selling price and items per order is expected to be 1%. The data found that the items per order has been declining ever since 4Q 2018. People buying delivery have to buy multiple orders. So what seems to be happening is that more and more people skip out on buying delivery and just come in to buy one freshly brewed coffee with their discount coupon. The receipts also implied that Luckin inflated its net selling price per item by at least 12.3%. The company CFO had predicted the company would have a net selling price of 11.2 RMB in 4Q. The receipts showed an actual number of 9.87 to 10.07. That same CFO also said that 63% of their customers are paying more than 50% of the retail price. This is to calm fears from analysts that the company was discounting too much. The receipts actually showed that this number was also false. Just 28.7% of orders are at 50% of the retail price. Note the date. This is in January 2020. 4Q 2019 is already closed. Either management can't keep track of their own data, or they're lying through their teeth. On January 31st, 2020, Muddy Waters publicized their short position, and the stock dropped a lot. Well, more like a bit. Luckin Coffee denied the allegations, but said that they would do an internal investigation. The stock largely recovered. Then on April 2nd, the company issued an SEC filing and admitted the presence of fraud. $310 million of revenue had been fabricated in the last 3 quarters of 2019. The stock got annihilated, dropping 95% from $26 to $1 in just about 51 days. The NASDAQ index promptly delisted the stock. People lost billions of dollars. Politicians got wind of the scandal and used it as a reason well, a pretty good reason actually, to demand greater transparency and oversight on Chinese companies listed in the United States. U.S. watchdogs cannot see into Chinese companies' books and thus rely on Chinese audit firms to confirm their numbers. But China, by law, does not allow the U.S. Audit Oversight Committee, the PCAOB, to examine Chinese audits. U.S. senators want to pass a law that says that if Chinese companies don't open up their books, then they will kick multi-billion-dollar companies like Pinduoduo, Alibaba, and Baidu off the U.S. stock market. Chinese founders keep listing their companies in the U.S., not only because they love the States and all that, but partially also because it lets them monetize their stakes in U.S. dollars rather than Chinese yuan, a currency that they cannot send out of the country. The whole thing has turned into a kerfuffle and a bit of a deadlock. The Luckin Coffee scandal has not made things any less awkward. Chinese regulators would raid Luckin Coffee's offices and open an investigation of their own. They would move the company through its own legal system and, of course, make everything good. Right? Right, yeah. So with all this happening, you just got to wonder, who wrote this report? The investigation took a lot of work and money. Estimates were something like $2 to $3 million. And the people who did it were not just ordinary dudes on the internet. They churned on it. And they also have not publicly stepped forward to take credit for it, even after the scandal went public. The Wall Street Journal says that the short report was prepared by a China-focused hedge fund called Snowlake Capital, a fund with $2.5 billion under management, and it seems to be based in Hong Kong. The sad thing is that it is not entirely clear whether or not they made enough from their investment to make the work worth it. I think the thing that really gets to me about this whole thing is that it took someone literally recording hours and hours of footage each day for 3 months straight before the fraud was uncovered. Someone put in unprecedented amounts of work to catch it. Were not for a fund like Snowlake investing millions of dollars and months of work into the investigation, you wonder how long Luckin Coffee, its fraud, could have gone undetected. Thanks, everyone. Have a good night. You can stay a little bit. I'm going to talk a little bit about kind of the work done, kind of more of a frequent thing where I kind of add a post video note, just other random thoughts I had about this thing that I couldn't fit in. So I kind of heard about this because I have a lot of background in financial, in the finance industry. And I think there's something really fascinating about, despite having all these kind of tensions between China and the United States, you still see a lot of companies IPOing their companies, or their Chinese companies, in the USA. And I think some of these are very, very, shady in that they grow so fast. And Pinduoduo is something I mentioned before. And Pinduoduo, they were founded, I think, in something like 2015 or 2016 or something. And they became like a multi-billion-dollar company in just a few years. And I think their founder, Colin IPO'd the company, he has $50 billion or something. But he IPO'd the company literally 3 or 4 years after it got founded. Luckin Coffee is even faster than that. Unlike Luckin Coffee, though, I don't think Pinduoduo has been hit as a fraud. In fact, it seems like their volume or their stock has been going really, really, really high up. But I was really interested in the Luckin Coffee thing because I think WeWork and Uber, they get a lot of publicity, got a lot of ink spilled because people are writing about this sort of model, this business model not working, right? You spend to get these discounts, to buy these users so that you can kind of build a relationship or such and such. And Luckin Coffee was kind of like the Chinese coffee version of that. And that was really interesting to me. And when this report came out, I read through basically the whole thing. And you should read it too. It's on the internet. It's 89 pages, but it's really interesting. The first 5 items that I talked about in the video are there. It's really good. But I think the second part of the report also just as interesting. They talk a little bit about caffeine consumption in China, and they talk about how the opportunity of coffee in in China isn't as great as it seems, because Luckin Coffee was always talking about, Chinese people need to drink caffeine. They need to have caffeine, and coffee is the way to do it. Well, their argument was that that need was already filled by tea, and tea is a huge market in China. And at the same time, Starbucks kind of realized that too, and so they positioned themselves not really as kind of like a stop and go delivery place or like a cloud kitchen, you would say, for coffee. But instead, they wanted to turn their place into kind of hangout. Get some cake, get some coffee, hang out with your dudes, and it's been very successful for them. They have some really flagship locations. Luckin Coffee was one of the few things that my friends in China have kind of mentioned about, and I think one friend said it kind of really put it in a very elegant sort of way that I felt kind of hits at the whole thing, right? That Luckin Coffee is still around in China, still sends out a whole bunch of discount coupons, and that the scandal has been something that's really, I think the words that she used was, it stains the corporate reputation of China. And I think it was something that really was worth reading and writing more about. Yeah. So that's the whole video. Hope you have a good one. You probably didn't listen to the whole thing, but maybe in the future I'll split this up into kind of like a second video. All right, everyone. Have a good night. Bye.